In this lecture, we're going to be talking about what makes crypto prices go up or down. Now, crypto prices are volatile. Don't forget, volatile means that they go up and they come down. Now, the following are the factors that affect the movement or volatility of a coin. Now, number one is supply and demand. That is the rate at which people are buying or selling the coin. Now, the higher the demand of a crypto, the higher the price will be. Demand means maybe the more people are buying it. So the higher the people are buying the coin or the crypto, the higher the price will be. And if the demand is higher than the supply, the crypto price will be rising for sure. And if the supply is higher than demand, the crypto price will be going down. So that's something you need to know. If you know that a lot of people are trading more coins, you can check the volume of a particular coin on CoinMarketCap. We talked about that when we were doing a fundamental analysis. So if you are checking the volume of a coin and see that more people are trading this coin or more people are buying this coin, then you know that the price of that coin will go up. And if more people are selling the coin, the price of that coin will go down. So supply and demand is one factor that affects the price of a coin. Number two is government policies. Now, when there is a rejection or acceptance of crypto by a particular government, it affects the price of crypto. Now, take for example, when the Chinese government banned crypto services in China, it caused a crypto crash. And also, when El Salvador adopted crypto, they became the first country to adopt crypto officially. Now, the value of Bitcoin and other cryptocurrencies went up. So government policies can make a price of a crypto to go up or down, and they can also cause crypto crash to happen. So if a particular big country or a leading country should say no to crypto, the price of Bitcoin can come down. So government policies is the second thing that can make the price of a crypto go up or down. Number three is innovation. Now, when there is a new innovation that will require the use of a particular cryptocurrency, the demand for that cryptocurrency will rise, which will then lead to the rise in price of the cryptocurrency. So let's say, for example, there is a new technology or innovation that requires the use of Bitcoin. Now, I know because you're going to need Bitcoin for that technology or innovation, it will lead to the rise in demand of cryptocurrency, and the rise in demand will now lead to the rise in price of that coin. So that means when there is more innovation or technology to use a particular coin, it will lead to the rise in price of that coin. Number four is the media. Now, when there is an announcement on the media, whether positive or negative, it also affects the price of cryptocurrencies. So when there is a good announcement on any cryptocurrency, it leads to the rise in price. When there is a negative announcement on the cryptocurrency, it leads to the drop in price. So all of these things are the things that can affect the price of a cryptocurrency. So make sure you are up to date with media, with government policies on cryptocurrencies, with the supply and demand of a particular crypto, and with innovations or technology around a particular crypto. All of this can help you become familiar with how crypto prices go up and down.